think we're my premise is that we're in a bond bear market now, and it started around 2021, 2022, and we broke like a long-term downtrend in US long-term yields, like the 10-year or the 30-year. It's been making lower highs and lower lows, the yields, for like 40 years, since the early 80s. And that means that bond prices were going up. People who borrowed, especially Uncle Sam and many others, like people who have mortgages or corporations, whenever the debt came due during that bull market, they could usually refinance it at a lower rate. They could even buy more stuff, so that helped the everything bubble. But now that's turned, and for since late 2022, yields were pretty steady, and in the last week they were like breaking out, even though in the last 2 days they've come off a bit. But I think that's just like a and bond prices have gone up. I think that's what's called in the markets like a dead cat bounce for bond prices. And I think bond prices are going to go a lot lower and yields are a lot higher. Here in the UK, we had a massive spike, I think, beginning of the week. Yields are up like 20 basis points in one day, but the last 2 days they've gone down quite a bit. Despite that, Elijah, we had the budget deficit data in the UK for I'm not sure for which month, but the latest month, and it came out at £4 billion more on the month than expected. It doesn't sound like a big number, but the UK economy is not as big. And I think people are complacent. A lot of people are, just because of the rally in bonds in the last few days, they are saying, oh, everything's fine. Let's go back into stocks. Don't need gold or silver. But I'm of the opinion that they're going to be proven wrong eventually. On a technical level, since the low in March 23rd, I think, silver's been making higher highs and higher lows. And unless we break below the recent low that we had, I think it was after we touched 90. If we break below that, then I guess that negates it. But we're still holding on. And yes, it's been frustrating of late. But as long as we hold on around 75, 76, I think we could possibly retest that 89, 90 level that we recently saw. And I think if we break that and make new highs, it could be very easy for silver to trade up to 100 in a matter of days or a week. And that's why I'm saying by July, we could be there. Gold, the same kind of scenario, but even though it's lagging a little bit, it's not really making higher highs or higher lows like silver. But the sentiment is definitely really low for bullion and for the miners. So yeah, we could stay around here a little longer, but that's what bull markets do. You climb a wall of worry. Definitely. And I think he could use there's a few excuses he could use, like the AI background, that AI could lead to a deflationary environment, and that would allow him to cut rates. And I think he's mentioned that before. I don't buy into it. The only reason he mentions it is because central bankers don't really fight inflation, because they're the creators of inflation. What they fight is the market perception of inflation. They're always trying to keep people in the dark. And that would be one way to do it. Like say that AI is going to create deflationary pressures. The other one is the mean PCE that he's talking about, where they strip out the parts of PCE that go up the most and that go down the most to smooth the number. But if you look at it, that PCE compared to the normal PCE the Fed looks at, the core PCE, When prices are going down, it doesn't make much difference. Like when inflation's under control, they track each other. It's only when there's inflationary pressures that this mean PCE looks a lot lower. So yeah, that's the second. The third is the concept of the K-shaped economy, where the top 10% are doing really well, but the bottom 90 is struggling with the cost of living, with higher mortgage rates, and that would be an excuse for them to cut. Of course, yeah, it would help him. Would it help him? I'm not sure, because since the Fed started cutting after COVID, or actually in September 2024, when they started cutting from above 5%, the 10-year yield is up almost 1%. So it doesn't really add up that if you cut the short-term Fed funds target, that mortgage rates are going to go down. So they could resort also to yield curve control, where they try to limit long-term 10 years and 30 years from going higher, and that would help mortgage rates stay low. So yeah, I don't buy into this this idea that Walsh is going to be really tough. Why would Trump really appoint him if he wanted someone that was going to, if he really wanted someone that would be more accommodative and help, he wouldn't have nominated Walsh. So when push comes to shove, I think he'll do what Powell did in the past, what Yellen did in the past, what Bernanke did in the past, and Greenspan, when financial conditions are not great, when the markets are illiquid, and there's a crisis or a sniff of a recession, they'll do whatever it takes. That's mean PCE. They've been talking about it. Yeah, trimmed mean PCE. And the Fed looks at the core PCE, which is not CPI, and the core PCE is already lower than the normal CPI, but the trimmed PCE, when there are inflationary pressures, looks a lot lower. And they could use that, or they could tinker with the methodology. They've been doing that for many decades. You've probably spoken to John Williams of Shadow Stats. He looks at how they used to calculate CPI in the 80s and 90s, and it's a lot lower. And I think in the last few years, they've tinkered with it again. So yeah, that's why we're told, the general public is told, that inflation's under control. Even Trump has been saying that, maybe not now, but last year he said, oh, inflation's gone down, everything's great. But we in the real world, and especially the people at the bottom, it makes a lot of difference for them, because they don't have investments or assets that go up with a falling dollar. They have a lot of proportion-wise, their income, a lot more of their income is used for basic necessities like shelter, transportation, food, and energy. And those things are going to continue to be, become less and less affordable, I think. But yeah, that's what they do. They try to trick the public, and they always find ways to sell it. And even if they're not able to hide the inflation through the numbers, I think they'd rather sacrifice the dollar in order to keep things going, because if the dollar loses more and more value, it means the debt that is in the economy becomes easier to carry. Yeah, I think the big money, or if you want to call it also the smart money, not all of them, but a lot of them can see it coming. They know that we have a fiscal problem, not just in the US, but in Europe, Japan, everywhere really. And the only way to keep things going is to keep inflating the system. It's like Richard Russell used to say, you inflate or die. And I think the smart money knows that. And they're going into gold, physical gold, the central banks. They know that the money that they print is worthless, so they're buying gold as insurance, and so are like the very wealthy through family offices and sovereign wealth funds. And I think yeah, it's wise to keep that in mind and follow the money, not the crowd problem. But a lot of these people that have given up on COMEX and the LBMA, yeah, they want the physical. They're like central banks, like in the Middle East, and sovereign wealth funds. So what I've heard is they're going directly to some of the mines, like mining companies, buying the silver directly from them, like layered, i.e., buy it spot or for delivery in a few months, because they want the physical. And maybe this exchange in Singapore, I haven't really, is it called ABAX or something? I haven't heard if it's going to be a physical exchange. I hope it will be. Yeah, so the world's moving away from COMEX and LBMA. And I've spoken about this, Elijah, because the COMEX LBMA, they're kind of like bucket shops. And the bucket shops were like stockbrokers back in the early 1900s, where you could bet on the prices of stocks, but you actually didn't trade them. So I think the problem for COMEX and LBMA in the last 2 years is that a lot of people thought they were bona fide exchanges, that they could go and take physical delivery, and you can't